Hello and welcome. My name is Andy Crook, and my mission is to help garage owners become more successful as a business. How I do that is I go live most weeks on a topic from one of the 5 pillars of business as I see it. And this week we're in the performance pillar. I want to talk about something that sounds really simple, but can completely change how you run a garage. Most small businesses have a cash flow problem, but they also have a visibility problem. They can't fix the cash flow or turn a profit because they don't know what's really going on. They know they're busy. They know the team is flat out. They know the phones are ringing. They know money is coming in, sort of. But when they are asked, what's the business producing? Income. What the business is keeping? Profit. And whether the business is actually healthy, sustainable, they simply don't know. And the result of not knowing is that problems pile up quietly. The unnoticed weak margin, the money that wasn't collected, the days when too little was achieved. And then one day the pressure shows up in the bank account, or the owner's stress level, or even just in the conversation at home. That is how it happens. It's not one big bang, but death by 1,000 cuts. And that's why this trying topic is all about taking the pulse of your business, not becoming an accountant, not building some fancy dashboard that you'll then never use, and not measuring 20 things really badly. Just looking at the right numbers at the right time, often enough to spot the patterns. And the plan is simple. You measure daily, review weekly, and you respond rapidly. Because when you stop guessing and you start measuring, you can start managing. So let's start with the first thing I suggest that garage owners measure, and that's daily invoice value. Basically, what you invoiced today. Because that's the first habit. Not because it tells you everything, because it doesn't. But because it's simple, it's available, and most importantly, it starts building the habit of measurement. And that really matters because most garage owners don't need more information, they need more implementation. So let's start with one number. Get used to recording it. Get used to looking at it. Get used to asking questions about it. What did we actually produce in it? And that's the first thing. There is also a problem with that because sales are useful. Sales can lie. A garage can invoice £2,000 a day and still be in trouble. Why? Because the sales tell you what went out. They don't tell you what was left. And that's why we need to understand 2 more numbers: gross profit and break even. These are similar, but not the same. And if you confuse them, you can fool yourself. So we start by measuring daily invoice value. And next we need to look at gross profit. And gross profit is what remains after the direct costs of the work have been deducted. In a garage, what that normally means is sales minus the parts costs minus consumable costs. So if you invoiced a job at £1,500, the parts cost £600, and the consumables related to that job cost £100, then your gross profit was £800. That's useful, but it didn't mean the business made £800 profit, or what we call net profit, because the business still has to pay wages, rent, rates, insurance, software, utilities, admin, finance, waste, compliance, and all of the rest of the costs with opening the doors. And that's where the break even comes in. So we measure invoice value every day, and then we look at our gross profit on the work that we did. And after that, we start to look at break even. And break even is the point which the whole business covers its operating costs before it makes any net profit. So there is a clear distinction. Gross profit is the job profit, and break even is business survival. Or another way of putting it is gross profit tells you what the work gave you, and break even tells you what the business needed. That's the difference. And most garage owners need to hear that more than once, because some garage systems will show you gross profit, and the owners see that number and think, brilliant, we've made money. Maybe not. Because the next question is, was it enough to cover the break even? And that is probably the real question. It's that gross profit is £800, as was in the previous example, but your daily break-even point was £1,000. This means although you invoiced £1,500 in sales, you are still £200 short. And that's it. All of the work was completed today. And that's why turnover can flatter. And that's why being busy can be deceptive. And that's why some garages are always active, always tired, and yet they're still always under pressure. Because this is something I hear all the time, especially between garage owners or people in the trade. They always say to each other, "You're busy," and you hear them say back, "Yeah, we're flat out," or "No, they're quiet this month." Because the only yardstick they have is movement, how busy they are. They mistake movement for meaningful measurement. So the first thing we should measure is the daily invoice value, because it creates the measurement habit. Do this until it becomes habitual. Then measure gross profit. And most garage management systems can do this for you if they are not already. And then finally, your break-even point. Now, you might think break-even point sounds really complicated, but it's not. It's simply the monthly operating costs of the business. So it's your wages, employer costs, rent, rates, utilities, insurance, software, finance, admin, subscriptions, marketing, compliance, training, the whole lot. Added up and divided by either the number of working days in the month or the number of weeks in the month. Because then you'll have your daily break-even or your weekly break-even figure. And this changes the focus from revenue, which is a vanity metric, to gross profit, a sanity metric, to net profit, a reality metric. And this essentially is the pulse of the business. Just as measuring your pulse doesn't tell you everything about your health, it can indicate if you're alive, active, resting, or even stressed. But the number of garage owners who do not measure the business pulse is frightening. They wait until their accountant or their bookkeeper tells them they make any money at the end of the month, or worse, the end of the year. But by then, it's often too late to do anything about it. But there would be clues: the amount of cash in the bank, struggling to make payroll, dreading the VAT bill, not paying PAYE contributions, a slow death by 1,000 cuts that can be avoided by taking the pulse of your business day, reviewing it weekly, and responding. Because once you have your finger on your pulse, see what I did there, you can measure, move, and manage the money. Start with measuring the cash collected. What do I mean by that? Not what was invoiced, you've already measured that. What was actually collected? What actually landed in the bank? Because you can't spend invoices, you can only spend cash. And this is where some owners get caught out. They celebrate sales while starving for the cash. So track cash collected, because that tells you whether or not the money arrived. And once you start tracking cash, you can start a brilliant habit, which is moving. And there are various versions of this concept, and they all basically follow the same principle. If it's not there, you can't spend it, or sometimes called bank balance accounting. You simply allocate a proportion of the money collected to various accounts. And the first one is your tax account. If you are VAT registered, set aside percentage when the cash comes in. Not later, right then. Not mentally, but physically. Because too many owners treat VAT like their money until the HMRC asks for it back. And that's not a tax problem, that's a discipline problem. Because as business owners, we are unpaid tax collectors. So what you must do is open a savings account and put a percentage of the cash collected daily or weekly into what I call the VAT. And I call it the VAT vault. Start with a modest amount, and 5% is a reasonable number to start with, because some owners are tempted to start with the full 20%. But this is too much too soon. Not only will you end up with too much in this account, but you will probably run out of cash in the current account, which will lead to a habit of transferring it back and forth, or even worse, giving up on the process. So once we have our our tax or VAT vault, the next one to protect is the profit. And you've probably heard the phrase, pay yourself first. And it was first coined by George Samuel Glasson in the 1920s. And he suggested investing a tenth of your income. And being disciplined and only spending 9/10 of your income, you would be no worse off than if you spend it all, because you're only missing a tiny fraction. So in this instance, what I suggest that you could move is whatever is left in the bank at the end of the week, month, or year into a separate account, a profit account. And this means that you are periodically putting money aside, which means it isn't readily available to spend. And Parkinson's law states that any task will use all of the resources allocated to it. So if there's less money, you will spend less money to achieve the same outcome. And obviously there are limits to that. The problem with moving your money is that there isn't enough to go around to begin with, that is. So what you should do is start small. Like I said, if you just put 5% into your VAT vault, because you are taking the business pulse daily, you will start to notice patterns. And pattern recognition is something that humans are really, really good at. But unless you have the data in the first place, it's impossible to see these patterns. And this is why we must measure in order to manage and ultimately master our business. So although you take the pulse daily, you should only review weekly, because one day can lie. One big job, one late payment, or one absent technician can distort the day totally. But a week starts to show the patterns. And that's why we measure daily, review weekly, and respond rapidly. Daily measurement builds awareness. Weekly reviews reveal the patterns and provide you with 50+ opportunities to respond to those patterns. And that's the sequence. So at the end of the week, the owner should be looking at the data and asking themselves, did we cover break even? Have we protected the back? Is too much money still owed to us? And what needs changing to make it better next week? Once the pulse is taken, the business performance is a matter of fact, not opinion. The three most important areas that can impact garage business performance are, in my opinion, hours sold, parts margin, and overhead. Hours sold. This tells you whether the workshop is turning time into value. Now, we need to be a little bit more precise here, because labor sold or hours sold is not automatically the efficiency. It's a clue, but not a conclusion. To get the efficiency, you need a comparison. You need to compare hours worked compared to hours sold. And if a garage is invoicing correctly, i.e. is invoicing the hours sold correctly, but the hours sold is lower than expected, then something is wrong. And the most common cause of there being a shortfall in hours sold is doing the wrong kind of work, what I call high-risk jobs. That is the biggest cause of not selling enough hours. The jobs are taking too long. The next one, parts margin, because hours sold tells one side of the story, but parts margin tells the other. The work and the shop. Done a training topic on this, but just reiterating it yet. A garage can fit plenty of parts and still not make enough on them. If the parts margin is weak, that will quietly reduce the profit of the business. And the most common cause is not adding enough markup. It's as simple as that. We're not putting enough on the parts that we sell. And finally, the third most important area that impacts on the performance of a garage business is overhead. Selling more hours and adding more margin will undoubtedly increase the profit in any business, but so will reducing unnecessary costs. You should always maximize before you optimize, but reducing your cost of doing business by 10% could represent a significant saving. And the two most significant costs are what I call the two Ps: people and places, staff and your premises. But subscriptions, expenses, insurance and utility bills are also areas that should be considered to see if you can make some savings. So If I had to boil this whole topic into one sentence, it would be this: measure what matters, because you manage what you measure and master what you manage. Measure daily, review weekly, respond rapidly. Because a garage owner who measures nothing is hoping. A garage owner who measures occasionally is guessing. A garage owner who measures consistently is a master of their ship. And when you're asked, are you busy? Answer with a yes, based on the facts. And more importantly, add that we're also profitable. We consistently pass our break-even number on a Wednesday afternoon, or our average margin is 33% and we sell 75% of the hours worked every week. We have noticed that our overhead is increasing, and we've arranged a meeting with our insurance broker next week, because the pulse of the business is there, whether you check it or not. The only question is whether you're brave enough to face it. Remember, if you should, you must. And what's stopping? You're probably starting. See you next time.